Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, June the 28th, the year 2020. Let's talk trading. It's time for the weekly open and gap. And this week we've got 2 trading days left. And for those of you watching for the first time and those of you watching for more than one time. These videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you trade, always have your risk management in place. Do not lose any more on any one particular trade than you're willing to lose on a particular trade. And under the brain management, try not to fall into one of these traps because it's not the market, it's all you. And look at this. We are 5 hours into the market and all the gaps have filled. Had a slight gap down on the pound dollar, but it's filled. In fact, somebody was asking me about this via email or on Facebook or something, and they wanted to know where to place their stop loss. Well, once again, it doesn't matter what method you're trading. Your stop loss is always going to be a function of your risk and your position size. It's just that simple. Now, if you have a method that says, well, here's where you should place your stop, it says at this level. Well, then what you have to do is, say you want to risk, I don't know, 2% per trade. And you want to have a stop loss, say that's 10 pips away. You got $1,000 account. Well, 2% would be $20, right? So you got a stop loss, you want it 10 pips away. Well, if you got $20 and it's 10 pips away, you can trade for what? $2 a pip, right? 2 times 10 is 20. So then you make your position size 2 mini lots. That's simple. Okay? You don't want to place your stop loss in a particular place and forget to adjust your position size. Because let's say you were trading 5 mini lots and you put your stop there and you didn't realize that, hey, if I lose, I'm going to lose $50 and I only want to lose $20 if I lose. You got to change your position size. And on the other hand, if you want to trade the same position size each and every time, well, guess what? Your stop loss is going to be that many pips away from your entry every time. So, it's a simple equation here. You either calculate your position size based on the risk and your stop loss level, or you figure out your stop loss level based on your risk and position size. So that's how you do that on, the weekly open gap trade or any trade as far as I'm concerned. Okay, we're putting in the opening range here for the day. Look at this. It bounced right off the opening range for the beginning of the month. Look at how this month went so far. Still got 2 days. Oh, high touch alert just came on. That's normally a buy trigger off the H1 candle. So we've got a green day so far today. Okay, we're 35 pips up for the month, 29 for the week. And as you can see here, we broke out of that inside bar from 22 bars ago, right there. And there's lots of inside bar trades happening, lots. So you can get in on them. So we had the daily, weekly, and monthly inside bar here on the pound all at the same time. And we're already 14 pips above that trigger at 23.44. No range to speak of because it's still early in the day. Once again, only 5 hours into it. And look at this. We had a gap down. We had the pivot point up here. Everything is telling us bias long. So taking the buy zone trigger, you can see we're only 4 pips from taking out that daily pivot. It's 4 pips away. So buy zone traders, once again, how do you calculate your stop? Well, if you want to put your stop here 10 pips away from that last trigger line, then you'd have one position size. If you want to say, nope, I want to give it some room to breathe because I know how it likes to oscillate, so I'm going to put my stop here. Well, if your stop is here and your position size is 2, then if you move your stop another 10 pips, your position size is 1. Once again, maintaining the same risk level per trade. That's the key. Same risk level per trade. And the thing is, if you have a method that you know statistically is going to pay off, then you shouldn't worry about taking the trade because you know the worst thing that's going to happen is going to hit your stop. And I've said that before in various videos. You know, the biggest problem traders have, whether they're new to trading or experienced, is when they start second guessing their signals. They start trying to outthink the market. When trading is just basically taking a position at a level, even if it's a squiggly line, you're saying you're going to take a position at a level. And then you got to see if the market, pays off or if it takes your money. That's it. That's trading. It doesn't matter why you enter to trade. Not at all. It's not going to have any outcome on the trade. None at all. And a lot of traders don't understand that. And it's so key. Doesn't matter what kind of supercomputer formula generated that entry signal. It's not going to matter. Look at that. We just hit the pivot. Just like that. So we crossed the 60 line and we took out the pivot. Okay, here we're looking at the rat zone. Once again, range is too low, so no rat trade. And on the dynamic rat, you can see it's pushing up the high for the day. That's why it's called dynamic, because it's happening in real time and it's subject to change. Okay, we hit, once again, we took out the pivot. Weekly pivot, 1, 2, 3, 98, 1.2398 on the pound. Look for price to take out that pivot. So somebody might ask, well, if I'm going to do that pivot trade, where would I put my stop loss? Well, you're doing a daily pivot, so you might want to look at the daily chart. And depending on how far price is away from the previous day's low in this case, you might want to put your stop just below there and adjust your position size. Or you might just say, you know what, I don't want to risk any more than 10 pips, and I'll trade my 2 mini lots. I'll wager a 20, make a $20 bet. Because what people don't understand about trading is what it does share with gambling is you're betting that price goes up. You can't make it go up. So if it goes up, the market's smiling upon you. Nothing you did made it go up. So that's why when you're looking at your trades, you don't analyze a trade in terms of the results. You analyze the trade in terms of how you executed the trade. As in, did you follow your plan? Did you enter when you were supposed to enter? Did you place your stop loss properly? Did you calculate your risk properly? Those are the things that make or determine whether or not it was a good trade, not just the outcome. The outcome, that's as my good buddy JNL0 would say, that's just gravy on the biscuit, okay? But what you want to do is focus on the process rather than the result. because the process, doing the process repeatedly, which is going to get you the result over the long term. But there's so many traders, they'll try a system for 2 or 3 trades. Oh, it didn't work, so they scrap that and they move on to the next. And that's not going to work. It's not going to work very well at all. And just take a look at the weekly. Okay, we've got a missed pivot down here at 23.01, and we've got our pivot this week is at 123.98. My guess, end of the week, they might take out both of those pivots. I could be wrong. We'll just wait and see. That's my guess. We take out these 2 pivots. Here we're out of the wick zone. Once again, where do you place the stop? Well, if you go long, you might want to put the stop at the bottom of the wick zone. If you're going short, you put it at the top of the wick zone. Or maybe you put it at the 50% level. You decide. Where does it make sense? Of course, outside, because you see here, it triggered. If you didn't take it, it obviously went to about the 50% level here. Would have taken you out, then you would have had to get in again. Here we go. What did I say? This month, just trade, especially if you're new, just trade the H1 breakout of the previous candle, either long above, short below. And so far, it would have bagged 5 pips this hour. It would have bagged, I don't know how many the last hour. Let's just see. Open, high. Looks like it would have bagged about almost 5 pips if you jumped in right at the open. And then here, let's see, what was this? High was 45. The high here was 54. That was at least 8 to 10 pips there almost. So once again, simple method, even on a Sunday night, would have paid off if you took those triggers. Now, one other thing I need to tell people about is the range. I've had a couple discussions this weekend with traders about the range. The percentiles. So 122 pips last week, high minus low, was a 51 percentile, meaning out of the last 100 weeks, 51 of those weeks was less than 122 pips. And so right here, looking at the H1 range gauge, you can see last hour it was compressed. It was only 9 pips. Hour before, 23 and 11 and then 17. So right here, 14 at the 33 percentile level. It's like, well, it's kind of low in the percentiles, but you see here, we really haven't done much because it's Sunday or early Monday if you're in Europe, or actually if you're in Australia, New Zealand area, that side of the world. These are the kind of ranges you expect. But of course, it could go higher. But right now, if I was in the trade, chances are I would have taken my been happy. Because, based on this time, and I've got other indicators that will show you, those ranges for each hour. You've seen them in the videos. But this is how I'm using, the smart range. In case you're interested, it's the smart ranges, TRO 2020 smart ranges indicator. And here, this is trading screen that I use with some of the things turned on, some of the features turned on here in the semaphore indicator that I modified. And this is mainly I use for when I'm trading reversals as opposed to breakouts. I'm looking for it. And then I've got the indicator that I just put together here, the training wheels no trade indicator. So it's telling me no sell, no sell, no sell. So not selling. So that kind of wraps up the weekly open video. So fellow traders, I hope you have a profitable week, and I hope you end the month profitably on Tuesday. And just remember, it's not what you trade, it's how you trade it. TheRumpledOne signing out.